I'm going to share 2 ways to generate an income by selling a covered call. You can have real-time notification on my trade alerts, plus direct access to me via my Q&A chat channel. Simply join my Simple Trading Room community by going to discord.simpleoptiontrading.com. I'll see you over there. Just as a quick refresher, I'm going to spend a minute or two talking about the mechanics behind selling a covered call. This might also help some of my newer viewers who are unfamiliar with this process. We start off with me on the left and the stock market with buyers on the right. And I'm going to create a covered call option contract for this fictional company called ABC Incorporated with a 1-month expiration and a $100 strike price. And the reason I'm able to write this covered call is because I actually own 100 shares of ABC Incorporated, the company's stock. So this allows me to use that as collateral. Now, once I've done this, I offer it for sale on the stock market, and then an interested buyer will let me know that they want to buy my option contract, and so they're going to be willing to pay the premium for that option contract. So I receive the premium, and the buyer receives the rights to exercise this option contract if the conditions are met. So using the 100 shares of Affirm Holdings that I own, I'm going to sell that covered call because there are 2 ways I could generate an income from them. First, I'll collect money for selling the covered call option contract. And then if my option gets exercised, I'll collect even more money and make a huge profit just from stock price appreciation. So I currently hold 100 shares of Affirm Holdings Incorporated, and I plan to use these shares in order to sell a covered call. So let's take a look at the option chain. So this is for stock symbol AFRM, and I'm going to take a look at the trade AFRM options. So I plan to do a 1-week option. So this is going to be February 11th, which is this coming Friday. And I'll be selling a covered call. And now I want to use the $93 strike price, which is currently paying 87 cents per share in premium. So let's plug these numbers into my Picking Stocks for Options analyzer. So today's February 7th, and we're doing a covered call for stock symbol AFRM with a February 11th expiration date and a $93 strike price, which is currently paying 87 cents per share in premium. And my cost basis is $56.50. Now with the February 11th expiration date, that makes the length of this covered call option contract 4 days. Now if this option gets exercised and my shares get assigned, I'll be paid $93 per share, which gives me a price appreciation profit of $3,650. And that represents a 64.6% profit. Now for selling this covered call option contract, I'll receive a premium payment of $87. And that $87 represents a profit of 1.54% based upon my initial cost basis for these shares. Here's the actual transaction record from my account history, where you can see that I was able to sell this covered call for Affirm Holdings stock symbol AFRM with a $93 strike price and an expiration date of February 11th. Now I submitted this order today, February 7th, and it was filled this morning at 6:30 a.m. Pacific time. Now at the time I sold this covered call option contract, it was paying $1.15 per share in premium. So when this option contract got filled, I received a total premium payment of $115, which showed up as a credit deposited immediately to my trading account. Now because I was able to receive the $115 in premium, that turned out to be more than the $87 I had originally anticipated. In fact, it was $28 more. So here's my new updated Picking Stocks for Options analyzer worksheet, which actually shows the new premium amount that I received, which is now $1.50 per share. And so you can see it's updated the premium amount that I received. The total premium amount is $115, and that represents just over a 2% profit based upon the cost basis for the original shares. And now I'll take a couple of minutes and briefly describe the other option trading strategy. Let me briefly describe the option trading strategy I have in mind. My plan is to use a rapid cover call technique. Some people often refer to this as a buy right covered call. And so here's how it works. So for step number 1, my goal is to identify an undervalued stock. So this is a stock that is in an oversold condition and has some growth and upward potential. So it could be a stock that's recently gapped down, or it's been trading under its moving average, and there isn't a strong or compelling reason for it to be doing so. Next, after I've identified the stock, I'm going to move on to step number 2, and that is I'm going to acquire 100 shares of the stock. And the reason I purchase 100 shares, that's the quantity I need in order to fulfill the collateral requirements for selling a covered call. Now, because I'm actually buying these shares, I need to be sure that I like the company and I wouldn't mind owning the 100 shares. And for purchasing the shares, I can place a market order, but my preference is to place a limit order so that I can actually control my cost basis. And so after purchasing the shares, I move on to step number 3, which is to immediately sell an at the money or near the money covered call option using those shares. And the fact that I buy the shares and then immediately turn around and sell a covered call or write a covered call is why this technique is called a rapid covered call or a buy right. So then after my option contract gets filled, I'll collect the premium payment. So now that you know my rapid covered call strategy, I'll provide a real life example in an upcoming video. You can get immediate access to my trade alert notifications by joining my Simple Trading Room community. Be sure to use the special link that I've included in the description below so you can join in on the action. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.